So let's get started with number one, why I think the multifamily is the ultimate wealth builder. And it's really because it's more scalable. That's the reason number one, it's more scalable. And when I was flipping houses, I flipped 3 dozen houses and it was a lot of work. I didn't realize how much work it was. And I was thinking, well, if I do one or more of that, it would be very difficult to 10x. And so I was like, well, what about rentals, right? If I want $10,000 per month in rental real estate and I can get each one to cash flow $200 a month, then I would need 50 of those houses. And I just got done flipping 3 dozen houses over 3 years. And that was a lot. That was a lot. And I couldn't figure out how to 10x it. And so scaling a rental portfolio didn't seem very practical either. Now let's talk about multifamily. Okay. Multifamily is the only real strategy that you can actually scale, and this is important, without having to work more. And you got to understand the economics, which we talked about a little bit here. Let's take a $4 million deal. Okay, so let's say you know about the acquisition fees. Scott talked about it, and it's 3%. So 3% of $4 million is $120,000. Typically, there's going to be a partner or two, typically two. And it's just a larger deal, so there might be multiple partners. But if it's you and a partner, you found the deal, and your partner brought $1 million to the table, which is exactly almost what Scott did. He almost raised $1 million. Not uncommon. You're now splitting a $120,000 acquisition fee. And this is why so many people can quit their jobs, because let's say your burn rate is $10,000 a month. You just got 60. You got a 6-month runway, right? And so maybe you have another $60,000. Now all of a sudden you have a 12-month runway, and it gives you the confidence to exit whatever you're doing right now. But it doesn't stop there yet either, because this one deal generates about another $100,000 per year. And it's really consistent of asset management fees, cash flow over that time, and profits at the end. And if you add everything together, it's about $500,000 of fees, cash flow, and profit divided by 5-year hold is about $100,000 per year. So you add it together plus the acquisition fee, and it's $620,000 over 5 years out of a single deal. That's wild. And this is really why multifamily is the ultimate wealth builder. And not only can you exit what you're doing because of the acquisition fees, which are very powerful, but you also can generate wealth and cash flow over 5 years. But you're not just doing one deal and done. No, you're going to do a deal every single year. Let's say you do a $4 million deal every year, and you're probably going to do more than buy just $4 million. But let's say you do. You are going to generate $3.1 million over 5 years, and it's at $50,000 a month, right? And this is really, there's no other business opportunity on the planet that can help you do that. Not with flips, not with rentals, not with short-term rentals, not with land, anything like that. So this is why I like the scalability of it, but I don't want to scale and work my tail off like I did with flips or potentially with rentals. And the second reason I like it is because it's much more passive than any other real estate or business strategy. We talked about flips and rentals. We know those are not passive, but franchise, I did a franchise, owning a business, not passive, right? It's typically you got to be in the business. Same thing when you're buying a business. That's all the craze right now. But someone's got to run the company. And even if you hire a CEO for the company, what if that person leaves? So this is not really very passive either. Online trading certainly is not passive either. And this is really why multifamily is the way to go, because with multifamily, I can put a professional manager in place. I can buy a deal. I can put a professional manager in place, and I have a selection of managers in the market. Okay, I can do that, and then I can manage a very large portfolio with a very small team. $100 million can be managed by 2 partners and a few virtual assistants. We have a $300 million portfolio. We have a team of 6. And so this means that multifamily, out of all these strategies I talked about, you can actually scale faster and with less work. But there's one other component when you're thinking about what am I going to do for investing, and that is risk. What risk are we going to take? Because there's no sense in doing a bunch of stuff over the next several years only to lose everything, like single family. Scott talked about in 2008, that was pretty catastrophic for a lot of people. And this is why I really don't love single family houses, because it's very susceptible to the market. Back in 2008, there was a lot of foreclosures that you saw. Forget the graph. A lot of foreclosures that really put a lot of people out of business. And I don't want to invest 3 to 5 years in a business and then lose everything. That's not good. I don't like that. Okay. And the reason I like multifamily is not only did it perform well during the last recession, there was hardly any foreclosures at all because these are existing cash flow properties, and the break even on a multifamily is much lower, right? If I have 100 tenants, if I have 65 tenants in there, I'm breaking even. Whereas a house, as soon as it's empty, you'll get no more cash flow. Plus, I also like the demand for rental housing in general, but multifamily specifically because it's more affordable, and we have this huge housing shortage. And it's too expensive to build new housing. So the number of permits pulled over the last 18 months have plummeted by 81%. So probably through the end of 25, there's nothing coming out of the ground afterwards. So this is why I really like this component of less risk. This can't be said for all the transaction short-term rentals, right? Used to be awesome hot 5 years ago. Well, it's no longer so hot. People are selling them because they're no longer profitable. This makes short-term rentals, for example, very, very cyclical. They're also susceptible to legislation. So I don't like some of these other cool strategies because of that. And this is why I keep coming back to multifamily. It's more scalable with less work and less risk. And so you're probably thinking, Michael, okay, I see how multifamily is in fact an incredible strategy to build wealth, but isn't this an advanced strategy? Shouldn't I build up more real estate investing experience? And we talked about that with Scott. I asked him the same thing, and he had some of the same thoughts about it as well. And the cool thing is, you don't need years of investing experience because this is a team sport. You're going to build your team and leverage your track record instead. And this is something you can do in 30 days. We're going to show you how to do that. And you don't need your own money because you can learn to raise it like Scott did as well. And here's my biggest mistake. And then I caution you to try not to do this yourself. And thankfully, Scott did not do that, but he did do the real estate investing in 2008 by himself. Didn't go so well. My first deal didn't go so well either. In my case, I had flipped at this point probably 10 or 15 houses. I thought I'm the man. But I made several mistakes because no one's advising me. I bought this building in Washington, D.C. A mentor would have advised me not to buy there because of the pro-tenant laws. And I didn't realize I had a professional tenant until I closed on the building. Okay. That person didn't pay rent and was suing the previous owner, which then he continued to do with me. A mentor would have told me to check the legal records of these tenants in this kind of demographic. And finally, I hired the wrong property manager, and a mentor would have told me not to do that and to hire someone who's familiar with Section 8 properties like this. So because of this, this was an awful deal. It ended up okay in the end, but it was 18 months of nightmares. So a word of caution, don't try and buy an apartment building on your own. Instead, I'd like to invite you to work with us, right? We have the #1 program on the planet to help you do your first deal. And many of our students get their first deal under contract as a GP in as little as 180 days because we guide you every step of the way until you do your first deal. So if this is interesting to you, I want to have a conversation with you. Okay, so just scan this QR code or go to the michaelblank.com/strategy. Just scan that and just schedule a call in the next couple of days. It's going to be a short 15, 20-minute call. And just want to have a conversation with you about where you are right now in your real estate investing career. What do you want to do? What's your situation? What are your goals? And if we can help you get there, we'll make some suggestions on maybe joining our community and our mentoring program, what that would look like. So we're not working. Here's what I'm looking for. I'm really looking for people who are high income earners who've completed at least one single family transaction and you want to scale. I mean, Scott is actually our perfect example of that. And the reason for that is because you understand if you've done a real estate transaction, you understand the benefits of real estate, number one, but you also understand the problem, which is you can't scale. Scott said it here. If you feel the same way, I don't have to explain any of that to you. Now, the only conversation we need to have is how to get you into the business, how to start, because we're really good at this thing. Also, if you value your time, you want to leverage other people's resources, other people's systems. You don't want to reinvent the wheel. You're financially stable. Look, you're going to buy real estate. You got to be financially stable. You need some kind of money to invest in your education, a mentor, look over your shoulder, put down a deposit, hop on a plane, wherever the case may be. So if you're not financially stable right now, if you don't have $30,000, $50,000 right now to invest in real estate in yourself, this may not be the best time to get and to get into the business working with us. And also, if you have a bigger vision, you don't want just a rental or two or a flip or two. You maybe actually want to build a real estate empire, maybe leave a legacy. And if you want to kind of do it now, like if you said, look, let's go. I don't want to wait 2 or 3 years and figure this out on my own. I want to do something in the next 6 months. So if I'm talking to you right now, then let's have that conversation. Just go ahead and just scan that QR code. or go to themichaelblack.com/strategy, book a call, find the time, and let's have that conversation. And when you start working with us, we're going to walk you through our system, and we're going to walk you through what I call the four pillars of deal maker success. We're going to show you how to get deal ready, things you can do before you talk to any investors or brokers. You're going to learn everything there is about multifamily. You're going to create a sample deal package. You're going to learn our scripts. You're going to build a team, and now you're ready to go. You're going to learn how to analyze deals, because it's, even for a capital raiser like Scott, he's like, yeah, it's not so bad if you're using the right tool and the right techniques. And then you're going to learn how to talk to brokers, what to say, how to get them to seriously so they give you off-market deals. And then we're going to show you how to raise capital as well. So if you want to do bigger deals faster, okay, if you don't want to do it on your own, figure it out, you want to do bigger deals faster, then let's have that conversation as soon as possible. Go ahead and book that call. And so another important thing, one of the reasons we get such great results is that we give you access to 3 Freedom Accelerators. Just really 3 things that we give you that are really, really important, aside from the system I talked to you, and that is you got to follow the right system. Ours is called the Dealmaker Blueprint, and the 4 pillars are, the simple version of that, but we kind of show you step by step what to do in week 1, what to do in week 2. You're not reinventing the wheel. We're going to give you the right support. You're going to be working a coach. In this case, Scott was working with Garrett. You're going to be working with Garrett or someone like that who's going to basically walk you through this process. You're going to get access to our community. You're going to get access to really experienced full-time syndication mentors who are going to look over your shoulder and make sure you don't do a deal. And you're going to join the right network. You need that right network to connect with operators, deal flow, and capital. So go ahead and let's have that conversation right now here. We'd love to show you what that looks like. So go ahead and book that call, and look forward to a conversation with you. And with that, I'll send you on your way. Thanks so much. Catch you next time.